Hello everyone. Good morning from here. It's 9:45 a.m. That's West African time. So if we're looking at it from the global view, that's about 8:45 a.m. UTC. Very excited to welcome you to Friday's Forex Morning Mastery session as we gradually prepare for the final trading day of the week. Now, first of all, I wasn't able to host the Monday and Wednesday session due to some personal things I had to run. And of course, it was quite unfortunate actually, but thank goodness we are here today. And I think on Monday, I made it a duty to give us an update on what the structure is looking like at the beginning of the week. And of course, I supported my narrative with some technical setups to help us navigate the market during the course of the week. And I do hope you are able to use that setup effectively. And of course, during the course of this session, we are going to be delving into that setup and of course see what has been going on in the market across the USOIL spot, the GBPUSD, USDJPY, and of course the XAUUSD. We want to understand what is going on behind the scenes, what is driving the sentiment in the market, and what are the chances that both buyers and sellers have for today. And we are also going to be taking into account the fact that today is the final trading day of the week. Remember, market participants tend to round off their trading activities ahead of the weekend. So most of the time we usually see profit-taking activities, which we are also going to be taking into account. And of course, today is the big one, the NFP, the non-farm payroll. Everyone is definitely looking forward to that one, and of course we are also going to be taking that one into account. For those who are joining us for the first time, you're highly welcome. I'm very glad to have you. KC, I see you in the comment section. Good morning. Glad to have you around with us today. So with that said, here we will be diving right into the business, and of course the first thing we usually do is to try to understand what is going on in the US dollar market dynamic, right? Very important. Of course we don't know, we really want to understand how the US dollar market dynamic has been faring, what market participants are thinking, and of course we want to see the ripple effect of this market across the assets we are monitoring. There's no way you want to be trading the Japanese yen, the pound sterling, the crude oil, or the gold commodity without really having a better understanding of what is going on in this market. Now, what you see on my screen right now is the DXY, that is the US dollar index. And for those who don't, is an instrument that gives us an insight into the performance of the US dollar within a specific period of time. And from what we have here on the 4 hours time frame, for those of you who have been following me for a while now, you definitely will be familiar with the setup. We have been talking about how important the $97.50 level has been for us in the last 3-4 months, I think, where it had consistently served as a demand zone. Every time sellers bring price into the structure, we see how buyers come in to push price up, and this has been consistent in the last 4 months, giving us an insight into how crucial that level is. Though we had a breakdown here at some point during the course of the month, but as you can see, price action is back above this particular structure. And another thing I also want to call our attention to is how the week began for us on the US dollar index. So let me zoom in so we can see things clearly. So the week started somewhere around the $98 area, just somewhere around here. And of course, you would have noticed that the dollar has been finding it difficult to break through that area. Now, every time buyers bring price here, we see price drop significantly back into that support line. And this has been consistent. We saw what happened here yesterday evening. Buyers are still struggling to break through that area. Now, what are the things that are influencing the US dollar negatively? Well, first of all, at the beginning of the week, we saw the dollar dropped, right? Price started somewhere around here at the beginning of the week. Then it dropped significantly all the way down into that support line. Now, traders were actually expecting the sentiment was more or less leaning towards the fact that Fed will be cutting interest rate, right? And to start the week, the US government also had a shutdown, which of course shook confidence in the US dollar. And that made the dollar weak at the start of the week. Now, like I said, the $97.50 level held support. As we can see, even though it dropped, sellers were unable to break through. It's a strong technical levels where buyers usually step in, where market participants think the dollar is cheap enough. So the market wasn't ready to push the dollar below this particular area, and this was quite evident with the structure we are seeing on the chart. We saw some couple of hammer candles there showing us that buyers are present, and we saw what happened yesterday. We saw an engulfing bullish candle bringing price again out of that structure, and in the last 24 hours the market has been consolidating. This is it right here. So after the engulfing candle, the market has gone through a consolidation, which further emphasized the prevailing uncertainty in the market. And of course, we are not surprised with this uncertainty. Today is the NFP, and major key players in the market definitely will step aside, waiting for the outcome of this data before making any aggressive bet. Now, on the economic calendar for today, we are looking at a couple of high impactful events from the United States. So today is Friday, October 3rd, and look at what we have here. We have the hold on a second. Okay, so we have the average hourly earnings. I don't know why FX Street is saying the time is non-available, but the usual time for the average hourly earnings is 12:30 p.m. UTC. That's about 1:30 p.m. local time. It usually comes in simultaneously with the release of the NFP results. So we are looking at the NFP, the average hourly earnings, and of course I think we also have the ISM services PMI, a data that will be giving us an insight into how well the service sector is doing. So these are the three major impactful events we are looking forward to today. Now, if job comes out stronger than expected, the dollar is likely going to bounce higher from this particular range we found ourselves. And if jobs comes in weaker, the dollar may fall maybe into the $97.50 area, or even drop further towards the $96 area, depending on what happens. Now, if jobs are in line with expectation, the range-bound trading may continue into the weekend due to the uncertainty and of course the Fed interest rate cut expectations, which has gripped the market. Now, as we head into the weekend, liquidity is likely going to be thin if that happens. So moves can be exaggerated. So it's better to keep positions light, trade the levels and not the noise. So we want to ensure that whatever trade we are taking today, we have reasonable risk management approach, not to expose ourselves too much, because we could see exaggerated price movement today. Then another thing I also want to talk about here, if you had noticed, for those of you who have been following the NFP for a while now, you see the figures are not too impressive. Last month we saw a 22,000 growth in job numbers, and the expectation now is 50,000. And in the past, we used to expect over 100,000, 150,000, and this is can be connected to the situation in the labor department, where Trump sacked the previous head of the department due to he was indicted for escalation of numbers. And I think we begin to see the true picture of the labor market right now, and this is further supporting the idea of rate cut expectation. So we look forward. I really want to see what the actual data is going to be like on this one today. So is it going to be 50 as expected? Is it going to be below 50 or even beat the 50 mark? And this will definitely determine how the market will react. So as it is right now, price is still above the $97.50 level. We still think that the dollar still has a room to rise from this particular area, considering the fact that we are sitting above a robust demand zone. Now let's go into the assets we are monitoring for this week. Let's see how the dollar has influenced those markets and how we intend to capitalize on the next trading opportunities. So now the first asset we are going to be looking at this morning is going to be the US oil spot. Now, like I said, I didn't run the Forex Morning Mastery on Monday, right? But I did give an update on my Telegram platform as to how we intend to navigate all of these assets. And for those of you who saw the setup I shared, I gave a simple trading setup on the 1 hour time frame, and this is what I was looking at the beginning of the week. So the first thing I did observe here at the beginning of the week was this ascending trend line, right? So prior to the beginning of the week, throughout last week, we saw the price of crude oil rise, right? Kept on finding higher highs and higher lows, and when we connected the pivot lows, we were able to identify an ascending trend line. And of course, this is an asset that is considered to be a US dollar denominated asset. Now, throughout last week, the idea of rate cut expectation devalued the US dollar. And when the value of the dollar drops, crude oil will become very cheap and for other currencies to buy. So if you have the Japanese yen, if you have the pound sterling, if you have the other currencies, you do want to convert to the dollar at this time when it is cheap to buy more crude oil into your reserves. And of course, that increased the demand, price increased. And as at the beginning of this week, price was sitting above this trend line with the hopes that the momentum will continue. As you can see, that price could respect the trend line and continue that uptrend scenario, which obviously never happened. And to help us navigate this market this week, this was the setup here that I shared with us on my Telegram platform. So for the first 7-8 hours, we saw price confined within a range between the $65 area and the $64.65 level. Now, you know what that means. That means indecision is happening. And whenever we have this kind of structure, what we normally do in this community is to wait patiently for either a breakout or a breakdown. So if a breakout happens, the breakout of the resistance line triggers buying idea, which obviously got triggered for me, but unfortunately that buy position did not do well. And of course, we saw price drop, break down the support line, retested it on the 15 minutes time frame, and since that day price had continued to drop significantly. I think I had my TP around the $63 level. I was able to capture about 170 pips, and since that Wednesday price kept on dropping, though I missed out on this whole lot. But for those of you who stayed faithful to our analytical approach and took advantage of that opportunity, well done and kudos to you. Now, going into today's trading session, will this momentum continue? As you can see, since the beginning of the week, the price of oil has been sliding as fears of oversupply grows. Now, OPEC Plus has been rumoring since last week that they will be boosting production in November, right? And you know what that means when production increases, that is supply will increase. That means the product will become surplus in the market, and because it's surplus, it becomes cheap. People want to sell it cheaper and price will drop, right? And while the idea of the US shutdown also raises concerns of weaker demand, we've seen a lot of layoffs. I think the data showed it. I also heard in the news. For instance, if you look at the ADP employment change, which gives us an insight into the private sector, they had a lot of layoffs. So you can see we had a deficit of 32,000 as against the 50,000. And this could be attributed to the shutdown narrative of the US government. So the government is not going to be able to pay workers during this time because the House, the Rep, the Senate are yet to come to a conclusion to approve what the government will be spending, right? So they will not be able to pay workers leave bonuses, salaries, and the likes. So this definitely will affect employment. And of course, we saw this reflect on the ADP employment. And with that, no jobs, people are not going to work. Demand for fuel, for oil will reduce definitely. And it raises concerns of a weaker demand for oil consumption, especially in the world's largest consumer of oil. Now, these bearish factors for me outweighs the potential impact of tougher sanctions on Russian oil and of course the attack of Russian facility by the Ukrainian army, right? So we are within what I would call a limbo where anything could actually happen. And if you're looking at this market from a long-term perspective, you want to continue selling, right? But if you look at what has been going on here since the beginning of this month, it appears that we're seeing some rebound. Maybe profit-taking activities could be happening to bring price back to the upside. Now, to help me navigate this market today, I do have a simple setup here on the 15 minutes time frame. So what I did here on the 15 minutes time frame is quite simple. So I took into account the character of price action in the last 12 to 16 hours. And if you look at it closely, after price dropped through the course of the week, we begin to notice some recovery in price as price begin to find higher lows, right? And this resulted in a situation where this trend line was broken to the upside this morning. And since the breakout happened, price had continued to maintain momentum above the trend line. So for me, this trend line you see here is going to be playing a significant role in guiding my trading decisions today. So what this simply means is that as long as price remains above the trend line, I will continue to look out for patterns and structures that support buying ideas. Now, I think we need a level to work with around this area. So we will be looking at the $60.80 level. So let me mark that level out quickly. It's very important. We'll be guiding our decisions today. So we have the $60.80 level, right? So as long as price remains above the structure, we maintain a bullish bias. Now, for those of you who might have missed out on this opportunity, let's exercise patience and let's see what will happen from this point. So currently price is looking as if it's coming down. So if it comes back here again, we could look out for buying ideas from here. Look out for buy positions to that could push price higher from that point. But if that does not happen and price breaks out of this resistance line at the $60.15 level, so let's mark that one out too. is that $61.15 level. So I like to put it right on top. So what I'm looking at here is this. So if you missed out, I already have a buy, though I entered very late, but hopefully it continues to the upside. So if you are yet to, there are two options for us to buy here. Now we have one here around the trend line. So if price comes back into structure, continue buy pressure on your 5 minutes time frame confirms buying opportunity, so we can join. And then if that is not the case and price just breaks out of the $61.15 level, it could confirm an uptrend continuation. Now please note that this is a counter trend opportunity, right? We are buying within a downtrend. So what this simply means is that you always want to be on standby. As soon as price moves significantly in our favor, we move stop losses, secure the position, because sellers could still come into play, right? So if price moves significantly, move stop losses accordingly and secure position. So if you have missed out on this buy from this point and price doesn't come back here, a breakout of the level will be a sweet spot to okay, I hope I'm very clear on that one. So that is what we are looking out to buy. So this trend line, like I said, is going to be playing a significant role today. So as long as price remains above 8, we maintain the bullish bias. Now if the bearish momentum wants to continue and sellers and buyers find it difficult to gain traction today, then I'll be looking out for selling ideas below the trend line. So theoretically, of course, when an ascending trend line is breached and broken to the down, buyers are no longer strong enough to hold that momentum. So if I want to sell, a breakdown retest of the trend line and the $60.80 level would be the confirmation I need to join a bearish move, right? So by the time price breakdown, then that definitely means that the bearish momentum that started the week will continue into the weekend. So that is basically what I'm looking at on the USOIL spot. A simple trading setup. We have the ascending trend line and two levels here that will further confirm the direction of where price will be going. So that is what I'm looking at on the US crude oil. I do hope I made myself very clear. If you have questions or you need some clarifications, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any before we move on to the next asset on our watch list. Stay tuned. Okay. Jenna Aruna, good morning to you. I'm happy to have you around with us today. All right, so in the absence of no questions, I guess we are all on the same page, right? And it's on that note, we'll be moving on to the next asset on our watch list. So the next asset we are looking at is the GBPUSD, the pound sterling against the US dollar, right? And I don't necessarily need to talk at length about what is going on here on the 4 hours time frame. I shared a video during the weekend explaining to us what I'm looking at. We had a descending channel during the last couple of weeks, and prior to the beginning of this week, we saw price around the resistance line of that descending channel. And in that video, I went on to tell us that I will be maintaining a bullish bias if price breaks out of that resistant line of the descending channel, which is exactly what happened, as you can see. And ever since price broke out of that structure, it has maintained momentum above it, though it was a little bit choppy. We had consolidation right above, like the first half of the week was more of an indecisive phase, as market did not really know where they want to go. So it was more of negotiation before Wednesday session, when price broke out of that structure after that disappointing figures from the United States. Now, as it is right now, the pound sterling is looking as if it has some potential. It has climbed to the 1.35 area, though it wasn't able to stay there for too long. As you can see, it got there on Wednesday, it got there yesterday as well. Price came back down into our key level, and look at what has been going on around the key level in the last 24 hours. Consolidation is going on. You know what that means. Market is anticipating a major event, and today we are looking at the NFP. Right, where's the calendar again? We are looking at the NFP, we are looking at the average hourly earnings, we are also looking at the ISM manufacturing PMI, all of which will be playing a significant role in determining where the sentiment will lean to. Then from the United Kingdom, the Bank of England governor is going to be speaking, right? And as the US dollar stays weak, the pound sterling definitely will be rising. Now, after job data showed unexpected layoffs and raised bets of Fed rate cuts, and of course the shutdown scenario too, which continues to add pressure on the dollar, it appears the path of least resistance for the pound sterling is to the upside. However, it's important for us to note that the pound strength is capped as well, because the Bank of England is also signaling that keeping policy too tight could drag inflation below target, and this is based on the current narrative from the UK, and this is hinting at the possible rate cut in the United Kingdom too. So as a result of that, we can see that the market is not really knowing where to go. So it started the week around the 1.342 support line, and then it's culminated around the 1.35, the resistance line. So it's more or less like a range bound structure, and within this whole area it shows that the market is indecisive at this point in time. Now, to help me navigate the market today, I have a simple structure on the 15 minutes time frame that will give me a clue of what is likely going to happen. So the first thing I notice here is that since price tested the 1.35-ish area, the momentum has been looking a little bit bearish, and this is on the lower time frame, 15 minutes time frame. And to when we connect the lower highs, we have a descending trend line, and you know what that means. When price is below our descending trend line, we want to be looking out for selling ideas, right? But price is still around our key level, so that is now making it a little bit dicey for me. Now look at what happened when price dropped below our key level on Thursday. That was yesterday. The key level became a resistant line. Price was unable to break through. Throughout yesterday's session, price just kept on trading below that structure, even though the dollar is looking weak, not so attractive at this point, and of course the pound sterling too as well. Investors are not sure whether to hold on to it or not, so they are looking forward to the Bank of England's governor's speech today to decide whether to do that or not. Now, this morning, we can see the price of the pound sterling broke out of that resistance line. Now, theoretically speaking, when price breaks out of a key structure like this, we expect that price is going to come back, retest the structure to continue the uptrend scenario. Will that be the case? Well, we don't know. But what I will do now is I will risk a position above the key level. I want to risk a position above the key level. So I will place a buy stop order above the key level, above the 1.345. Since we have a breakout of structure, and theoretically speaking, a breakout retest is what we're looking forward to, right? So I will be looking to buy the break above the continuation above the 1.345. So I just placed a buy stop order above the 1.345. So let's see how that is going to play out. Now, if that is not going to be the case and the sentiment continues to be bearish, then we have this ascending trend line to work with. So if price can break down the ascending trend line, then we can start considering selling ideas. So something like this, a breakdown, retest of structure, continue selling pressure below that key level, and the trend line definitely will welcome selling ideas. So what levels are we going to be using to navigate this bearish momentum? So let's look at the 1.34375. So I will mark that one out here, and I will explain to you why I'm using that. So we have the 1.34370. Okay, 1.34370 level. So that's duly marked out there. You want to be marking that one out on the screen. Okay, so if I want to start selling, I need price to break down my key level, my trend line and the 1.3437. Now, why have I chosen 1.3437? Now, if we go to yesterday, an hour or two into the New York session, we saw selling pressure resume from that area. So that place has a memory for sellers, right? And we saw here how it became a support at some point, support here as well. Then it dropped below the structure at some point here this morning, and about an hour or two ago it dropped below a little bit and price went back up. So this whole move to the upside could turn out to be a false breakout. Let's see what happens if it does. Selling below, if it comes back in here, price will have broken down that trend line, right? And of course that will be some bearish expectations there. So I will place a sell stop order below the 1.34370 as well. So we will be on standby for whichever scenario the market presents to us today. So I have my sell stop order below the structure. So let me just illustrate this to make things easy on the high. So we're only buying above the 1.345, right? The buy stop order is above there. And what else? So that is what I'm looking at today. So let's see how the market is going to play out. It's a simple trading setup. And from the labor data we saw from the United States, we might not be seeing anything interesting from the United States today. And if it gets surprising, then we could see the dollar rise a little bit to the downside. So it's a simple setup. Price continues to consolidate around the 1.345. Let's see what happens. Are we going to see a breakdown retest of the 1.343, or are we going to see price break out of the 1.345? That one. So this is what I'm going to be using to help me navigate the market today. So if you have any questions or you need some clarifications whatsoever, feel free to let me know in the comment section. So I'll take another 5-10 seconds. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. I just all I've said has been quite explanatory, right? And we're all good to go. So let's see what happens. Will price climb back above the 1.345 to confirm the uptrend scenario? Then another thing I didn't mention here is that if it so happens that we get a buy position triggered and price continues to rise, please let us note that when price gets close to that, all stop losses on that buy position to either break even or secure some small profit. And depending on what happens around the trend line here will determine if the momentum wants to continue into the weekend. Okay, so as soon as price moves into the trend line, we move all stop losses, secure the position while we wait and see how the price or how the market will react to that trend line. If it breaks it out, retest it for confirmation's sake, and then we are good to continue the uptrend, add more buy position. But if buyers find it difficult to break through the trend line and we continue to see selling pressure like this, price was unable to break through, or we see a double top structure or any form of reversal setup, then that means that a breakdown of the neckline could be all we need to confirm that sellers are going to be leading the market into the weekend. So there you have it, my in-depth look at the GBPUSD. So I wish us all the best of luck on that one. So with that said, let's move right into the next asset on my watch list. So the next asset I'm looking at for this week that I have been monitoring for this week is the USDJPY, the US dollar against the Japanese yen. And of course, what a big move we had this week on the USDJPY. So the structure you see here is on the 4 hours time frame, and this was what I shared with us during the weekend prior to the beginning of the week. So price was somewhere around here. Remember, if you watch the video, this was where price was at the beginning of the week. We had a consolidation and we were able to spot an ascending channel prior to the beginning of the week. This is the resistance line of the ascending channel, and this here is the support line of the ascending channel. Now, I said on during that video that we are waiting to see if the breakout of the ascending channel will be a true one or a false one, right? And one of the things I said is that it's either price comes back to retest the resistance line and then goes to the upside, it confirms the uptrend, or price breaks out of the 149.950 to confirm the uptrend continuation. And I also said here that if price drops back into the ascendant channel, then we may likely see price drop to the downside, and that a breakdown of the 149.150, which is our key level for the week. Remember, I told you that this area had been a strong selling niche since the beginning of this month. Buyers had never broken through that structure until last week, as you will see here. So we were waiting to see if that breakout was a true one or a false one. Then it turned out to be a false one, as we captured this bearish move from below the 149.150. Let me share with you the structure I shared on the Telegram platform to guide our decision for the week. So this is what I shared with you on Monday, right, on the Telegram platform. So for those of you who are following me, this was a setup we had. We had this range bound structure. Price started the week around the 149.540, and the week started on a bearish note as sellers took over the market, pushing price to the downside. And the week US employment data and shutdown concerns further supported that downtrend move, pushing markets to expect multiple Fed rate cuts this year. Meanwhile, the yen is supported by the Bank of Japan's hawkish tone as policymakers openly considered raising interest rates, giving investors hope of tighter Japanese policy. And from the structure I gave us on Monday, I said we are looking to buy the breakout of the 149.540, which never happened, and we're looking to sell the breakdown of the 149.120, which was exactly what happened. And look at what price continued to move to the downside. Though I didn't capture all this movement, definitely I didn't capture everything. Around 147.800 was where I left the market. I never knew it would go as far down as this, and for those of you who actually captured that, well done and kudos to you. Now, going into today's trading session, how do we intend to navigate this market today? So scaling down into the 15 minutes time frame, this is what I have here. So I captured I was able to see an ascending trend line, right? So can you see we have a low here that was yesterday morning. Price gave us a higher high, we had a higher low, higher high, and then look at what happened in the last couple of hours. Price appeared to have broken down that ascending trend line. Now we are now in a dilemma of whether this trend line, this breakdown, is a true one or a false one. So if it's a true one, and then definitely we want to be seeing some lower lows at this point. Now the lowest point around this trend line is this point here. So I'm looking at 147.350. Okay, so 147.350 is a 147. Let's look at 147.325. 147.325. So that's the support line we need to see broken to the downside before we can really say this breakdown is a true one, right? Look at what we have. So this area here was a support line yesterday. During the Asian session, we saw buy pressure from here, right? Price went up and then came back down into the structure, breaking down the trend line. Now price is consolidating. Okay, so let's see if buyers will come in again from here to push up, or buyers will lose the steam and sellers will take over from this particular area. So that is what I'm looking at to sell or buy the USDJPY. So we have a resistant line somewhere here. Somewhere here around the 147.350. So it's important we mark that level out as well. 147.350 level, right at the top. Okay, so if we are going to be selling below the 147.325, we will have our stop losses above the trend line. So let's give about 15 to 20 pips of stop loss, giving enough breathing space for price action to move around, right? So I already have a sell. If you look at the bottom of your screen, you'll see that I had a sell triggered already. So but I will be placing another sell stop order below the 147.325. If price can break down that structure, I want to have a, if that is not the case and markets deem it fit to start taking some profit ahead of the weekend, the 147.350 could give us a good confirmation. So for me, I would not be jumping into the buy right away, because if price breaks out of this resistance line, it's still yet not above the trend line. So I need price to come back above the trend line before I want to buy. So what I will be doing to buy now is wait for confirmations to happen. So I would like to see a breakout. I like to see price come back, retest the structure. All of this can be identified on the 5 minutes time frame. Then I want to see some buy pressure above the structure. Then I want to feel confident jumping into a buy move. Now, if price continues to rise from there and it breaks out of this highest point here at the 147.775, let me mark that one out too as well. Very important. You also want to be doing the same, as we are going to be using this to maximize that uptrend scenario if it ever gets broken. So if it gets broken to the upside, we look to add more buy positions to our existing trade. So this is basically what I will be using to navigate the market today. The trend line is very, very important. Let's see how it plays out. But as it is right now, price has broken down the trend line and we are waiting to see if this is a true breakdown or not. Time will tell, of course. So I wish us the best of luck on the USDJPY. Let me take about 5 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. Okay, so I guess we are all good to go on the USDJPY. Let's see how this plays. I have a strong feeling it's going down, but market can do the otherwise, you know. Just get prepared for whatever scenario that the market presents to us. So best of luck on the USDJPY. Moving on. So the final one on my watch list for this week is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And what you see on my screen now was the setup I shared with us during the weekend. We saw the price of gold continue to rise significantly, hitting records after records through the last couple of weeks. This week as well, it has broken the previous week's record. It's another record high at the 3,898 level, and ever since that test happened on Wednesday, we've seen market go through a consolidation. Now, through the course of the week, this was the setup we were looking at, and in my video during the weekend, I was telling us that I'm looking to buy the breakout of the 3,790.800 area, and ever since price broke out of that structure, we've seen price move over 1,000 pips in that direction. In fact, there was a second chance here on Tuesday where price came back to retest the structure that was broken before that move continued. And to help us navigate the structure, I shared with us a simple trading setup on the 4 hours time frame after identifying this range bound, and I went on to tell you how I missed this old move. I actually missed this one happened during the Asian session on Monday. I was fast asleep then, and then price came back to structure immediately after I posted my update, I think about an hour or two after, and then I was able to capture some of this move to the upside. I never knew price would break this old record again, but you know, market is unpredictable. Just catch the one you can and feel fulfilled with whatever you get from the market. So for those of us who capture this move, well done, kudos to you. So right now, the gold is going steady right now, though in a choppy situation, which is common with record high area, which is common with uncharted territory. And since the week US job market and Fed rate cut expectation is still in the air, I want to believe the US dollar will be under pressure against the gold commodity. And if we also consider the ongoing geopolitical tensions, you know what geopolitical tension means. Safe haven support always goes for gold, and this may likely support the uptrend continuation. So this, and the only thing that I can see that could cap this uptrend scenario is the optimism in the equity markets. That is one. And secondly, the overbought conditions, which could limit upside to here. The market is overbought right now, and it could crash anytime. Of course, we should not continue to get excited about this old move to the upside. We also need to be wary of the overbought conditions. So two factors here could limit the upside: overbought conditions, and of course the optimism in the equity market. So if market participants move their money, move their capital to equity market, it's likely that the gold commodity will drop. Now, to help us understand the sentiment in this market from a technical standpoint, I do have a simple trading setup quickly, and then we can round up on this one. Where is it? I think I had it somewhere here. Let's see. I don't know what happened. Okay, I can't find it, but let's mark it out together. I think that will make it more educative. Okay, so this is a structure I'm looking at on the 15 minutes time frame now. So yesterday we saw price drop very strongly from the all-time record high area, and since the drop happened, we've seen price go through a consolidation, and it appears the market is recovering again. And if we find higher lows, connect the series of higher lows here, we have the ascending trend line in place, and I think we have price action evolving into what is looking like an ascending channel, right? So that's one structure I'm looking at here. And then secondly, we have I think we have a resistance here. So I'm looking at a psychological level, something at a 3,865. 3,865 is looking psychological to me. So we have 3,865.00 level marked out, and then you'll see how important that is when we bring back our candle chart. Now look at the candle chart. Go to yesterday morning, look at how this area became a strong selling niche, and to the downside, look at what happened. Sellers begin to take advantage of that level. So as soon as buyers get there, buyers lose momentum and sellers come in. Now in the last 1 to 2 hours as well, the same thing has been happening. Buyers came in, but they couldn't break through, and this has been going on for the last 2 to 3 hours. Now this is giving us a range bound structure within that particular area. Let's zoom in so we can see clearly. So we have a range bound, and let me mark out the support line of this range here. So we have the 3,358. I want to give it a different color to emphasize the difference from the previous structure we marked here. So we have 3,858, right?